Hi, this is Zach Mayer with the Bulletin Board Heroes here on Share Talk for Thursday, March the 19th. Starting off with the BATM Advanced Communications here, a bit of a rocky ride over the recent past. There was a sort of wild range, swinging range between 35 pence and 50 pence. The noteworthy thing today is the bear trap gap reversal that we've had to take the shares above the 200-day moving average at 42 pence. And at least while they remain above that feature, especially towards 40 pence intraday, we're looking for a top of broadening triangle from the beginning of, the end of last year, the end of the year before last rather, heading up towards 65 or even 70 pence. But sub 40 really just means that we're in a range and not really on the way up. Next up is Eddie Stobart, where maybe second time lucky for the Bulls. They had a decent rebound earlier in the month or towards the end of February going into the beginning of the month with the shares up from sort of 7 pence to 14 pence. History could repeat itself again, hopefully given the latest trendline break that we've had from February. Current situation is that while we're above today's intraday low at 7.5 pence, we're looking back towards the 14 pence area that was the initial March peak. Onto a stock which I've been toying with looking at on several occasions, but today's the day for McColl's retail group to be in the limelight. We've broken this February resistance line at 20 pence, and while we're above 20 pence, then looking for the shares to head back towards the 50-day moving average at 39 pence. That's just below a gap to the downside from the end of last month as well. So as a best case scenario, that's where we would hope the shares are going. Be cautious on the stock, maybe wait for an end-of-day close through 25 pence, given yesterday's initial failure to break or sustain that particular zone. Cues around supermarkets remind us that Ocado's been the place to be over the last week in terms of the share price. Nice double bounce there towards £10 at the end of last week or going into this week, and a gap higher through the 50 and 200-day moving averages, currently around 1,220 pence. View at this stage is at least while we're above former resistance from January, we should head higher towards the top of a broadening triangle, currently heading as high as 18 pence. A support at the moment really towards the £13.20 to £13.50 area, and ideally that holds over the next few sessions. On to more usual fare for the Bulletin Board Heroes comes in the form of Oracle Power. Here we've had a nice bounce off the 200-day moving average at 0.5 pence, and while we're above that on an end-of-day close basis, looking for at least the 50-day moving average at 0.84 pence, and hopefully up towards the 1 pence to 1.2 pence resistance area from early March and February. Finishing off today's selection with Wey Education. Here we can see that shares have delivered a similar bear trap gap reversal to what we've seen earlier at BATM. The view here is that we could see further upside, probably along the lines of a rising trend channel, which I'm just about to draw, heading towards the 24 to 25 pence area. That channel's been in place since May last year, and really while we hold above the 50-day moving average at 15 pence, one would be looking for 24 or 25 pence over the next few weeks. That's it from me today. More updates tomorrow.